video, I'm going to share with you two undervalued small cap stocks with recent insider buying activity. Let's get into it. Hey friends, welcome back to the channel. I am Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've covered over 600 videos and over 280,000 watch hours as of November 2024. I also focus on topics related to regional and world economy. Daiwa House Logistics Trust, a hidden gem. Let me tell you about Daiwa House Logistics Trust. This rat caught my eye with its market cap of about 560 million Singapore dollars. Now, what makes this interesting is its current PE ratio of 9.7x, which looks pretty attractive in today's market. The trust makes money from commercial properties, and they pulled in about 56.5 million Singapore dollars in revenue. Their profit margins have been on a roller coaster ride. They hit a nice 2% in 2022, but settled at around 0.7% by mid-2024. Their operating costs stay under 6 million, which is good news for their bottom line. Here's what got me excited. Insiders bought shares in September 2024. When the big shots put their own money in, it's worth paying attention. Sure, they face some headwinds with external borrowing being their only funding source, and they're looking at a 10.5% drop in earnings over the next 3 years, but their revenue is still growing at 3.79% yearly. ValuMax Group, the pawnbroking player. Next up is ValuMax Group. These folks are in pawnbroking, money lending, and jewelry trading. Their PE ratio sits at 6.0x, which looks like a bargain to me. What's cool about ValuMax is how they've grown their profit margins. They hit 30.28% in their latest report. Yes, their costs are going up, but so is their revenue. The company has seen some serious insider buying over the last 6 months. Always a good sign when the people running the show believe in their own business. Now, they do have some debt issues. Their operating cash flow isn't covering all their debt perfectly, and they rely on external borrowing. But here's the silver lining. They haven't diluted their shares in the past year. That means existing shareholders haven't seen their piece of the pie get smaller. Market context and analysis. Small cap stocks are having their moment right now. The Russell 2000 index has been leading market gains lately. This tells me there's appetite for smaller companies, even though we're not at all-time highs yet. Both these companies operate in different sectors, which gives us nice diversification. Daiwa House plays in the logistics space, which is crucial for our modern economy. ValuMax, on the other hand, provides essential financial services that tend to do well in various economic conditions. Risk factors. Deep dive. When we look at small cap stocks like Daiwa House and ValuMax, we need to talk about some serious risks. Small cap companies typically experience much higher volatility than their larger counterparts. We're talking about price swings that can be 1/3 higher than what you see in big companies. Just look at historical data where small cap funds showed a volatility of 19.28 compared to 15.54 for large cap funds. This means your investment value could bounce around quite a bit. Both Daiwa House and ValuMax face typical small cap challenges: limited financial resources, less analyst coverage, and lower trading volumes. This makes them particularly vulnerable during economic downturns. And with current market uncertainties, we need to watch these factors closely. What really keeps me up at night about these stocks is their liquidity and access to capital. Small caps often struggle to secure financing when credit markets tighten, which is exactly what we're seeing in today's high interest rate environment. For Daiwa House, their reliance on external borrowing could become a real headache if refinancing costs continue to rise. ValuMax faces similar challenges with their debt coverage ratios. While small caps historically outperform large caps, delivering around 9.12% annual returns compared to 7.12% for large caps, they require a strong stomach for risk. Think of it like riding a speedboat versus a cruise ship. Sure, the speedboat might get you there faster, but you're in for a bumpy ride. That's why I always tell my viewers to limit their small cap exposure to a portion of their portfolio they can afford to see fluctuate significantly. My investment perspective. Looking at the broader market context, small cap stocks have been showing remarkable strength lately, with the MSCI World Small Cap Index jumping 13.3% since July 2024, outperforming both the MSCI World Index and Nasdaq 100. This surge in small cap performance makes both Daiwa House Logistics Trust and ValuMax particularly interesting right now. For Daiwa House, despite a slight dip in their latest financials with gross revenue down 10.7% to $27.58 million and distribution per unit at 2.45 cents, their fundamentals remain solid with healthy cash reserves of $37.4 million. ValuMax's position is equally compelling with their impressive interest coverage ratio of 13.9x and total assets of $115 billion, showing strong financial health despite their debt-to-equity ratio of 135.9%. When we look at the timing of these investments, it's particularly favorable as we're seeing signs that interest rates may have peaked. Market analysts expect rate cuts from major central banks in 2024, which typically benefits small cap stocks more than their larger counterparts. This monetary policy shift, combined with ValuMax's strong EBIT of $77.2 million and Daiwa House's strategic property portfolio, positions both stocks well for potential growth. While some investors might worry about ValuMax's debt levels or Daiwa's recent revenue decline, I believe these concerns are already priced into their current valuations, making them attractive opportunities for investors willing to look past short-term market noise. If you enjoyed this deep dive into small cap opportunities, you'll definitely want to check out my video on Singapore REITs, Hidden Gems for Passive Income, where I break down the best REITs for monthly dividends. You'll find it linked in the end screen. If you enjoyed this deep dive into small cap opportunities, you'll definitely want to check out my video on Singapore REITs, Hidden Gems for Passive Income,